Money. It's something we use every single day. We buy our morning coffee with it, pay our rent with it, and save it for the future. But have you ever wondered, where did money actually come from? Who decided a piece of paper or a digital number on a screen could have value? And how did banks rise to become some of the most powerful institutions in the world? Today, we're taking a journey through 5,000 years of human history, tracing the evolution of money, from shells and metals to paper bills, digital banking, and now even cryptocurrencies. This is the history of money and banking. Part 1. Before money, the age of barter. In the earliest human societies, there was no money. People survived by trading goods and services directly, a system we call barter. A farmer might exchange wheat for a pot made by a craftsman. A hunter could trade animal skins for tools. But barter had problems. What if you needed meat, but the hunter didn't want your wheat? Or what if the value of what you offered didn't match the value of what you needed? This challenge created the need for a universal medium of exchange, something everyone could agree on. Part 2. The birth of commodity money. The first money wasn't paper or coins. It was commodities, objects that had value themselves. In parts of Africa, cowrie shells were used as currency. In ancient Mesopotamia, people paid with grain and livestock. In early China, tools and knives served as money. But over time, precious metals became the most trusted form of money. Gold, silver, and copper were rare, durable, and universally desired. This was the beginning of commodity money, money with intrinsic value. Part 3. Coins and the first standardized money. Around 600 BC, the Kingdom of Lydia, in present-day Turkey, minted the world's first coins. These coins were made of electrum, a natural mix of gold and silver, stamped with official marks. For the first time, money had a standardized weight and design, making trade faster and more reliable. Soon, coins spread across Greece, Rome, India, and China. They became symbols not only of wealth, but of state power. The Roman denarius, the Greek drachma, and the Indian punchmark coins are all examples of this new, powerful invention. Part 4. Paper money and the power of trust. Coins were heavy and difficult to transport in large amounts. So in 7th century China, during the Tang dynasty, the first paper money appeared. At first, merchants issued promissory notes, essentially, receipts for deposits of coins. Later, the government itself began printing official paper notes. This was revolutionary. Unlike gold or silver, paper had no intrinsic value. Its worth depended entirely on trust in the authority that issued it. By the 13th century, when Marco Polo visited China, he was stunned to see paper money widely accepted. Europe, however, wouldn't adopt it until centuries later. Part 5. The rise of banking. Now that money was circulating, people needed safe places to store it. This gave birth to banks. The earliest banks were run by merchants and temples in Mesopotamia, Greece, and Rome. They safeguarded deposits and made loans. But modern banking as we know it began in Renaissance Italy. The powerful Medici family of Florence created one of the first major banks in the 15th century. They introduced double-entry bookkeeping, letters of credit, and a vast financial network across Europe. Banks became the engines of trade, exploration, and empire building. They financed voyages, armies, and governments. By the 17th century, great institutions like the Bank of England were founded, issuing banknotes backed by gold. Part 6. The gold standard. For centuries, money remained tied to precious metals. Under the gold standard, each unit of currency was backed by a fixed amount of gold. This system created stability and trust, especially in international trade. If you held a British pound or a US dollar, you could exchange it for gold at the bank. But the gold standard also had limits. It restricted governments' ability to print money in times of crisis. Part 7. Modern banking and paper currency. In the 20th century, countries gradually abandoned the gold standard, especially during the Great Depression and World Wars. In 1971, U.S. President Richard Nixon ended the dollar's direct convertibility into gold. From that point forward, money became fiat currency, backed not by gold, but by the government's authority and the people's trust. Banks also transformed. They offered checking accounts, savings accounts, credit cards, and mortgages. The rise of central banks, like the Federal Reserve in the United States, gave governments powerful tools to manage inflation, employment, and economic growth. Part 8. Digital banking and the cashless era. By the late 20th century, technology revolutionized money once again. Credit and debit cards replaced cash for everyday purchases. ATMs made money available 24/7. Online banking gave people control of their accounts without visiting a branch. In the 21st century, mobile payments and apps like PayPal, Venmo, and Apple Pay changed how we move money. We've entered an era where cash is no longer king. Part 9. Cryptocurrencies, the future of money? In 2009, a mysterious figure known as Satoshi Nakamoto introduced Bitcoin, the world's first cryptocurrency. Unlike traditional money, Bitcoin is decentralized. No government or bank controls it. Instead, transactions are verified through blockchain technology. Cryptocurrencies promise freedom from traditional banking, but they also raise questions of security, regulation, and stability. Some see them as the future of money, while others see them as risky speculation. Either way, they represent the latest chapter in humanity's long story of money. Conclusion: the power of money and trust. So what is money, really? At its core, money is not gold, paper, or numbers on a screen. Money is trust. Trust that others will accept it. Trust that governments will protect it. Trust that banks will safeguard it. From barter to Bitcoin, money has always been about human belief. And as technology continues to evolve, one thing remains certain: money will keep changing, but its role as the lifeblood of civilization will never disappear. This has been the history of money and banking, a journey that tells us not just about economics, but about the story of humanity itself.